Hello, Alison.
Hi,
how are you?
Camilla. Good to see you. It's been a while.
It's been a while,
Yeah.
and we had to come back. We've been talking in the podcast already about mortgages, but I feel there's so much to this topic, and we need to talk more about mortgages and dive more into that. So today we are here at Alison Decotta's office. And please, Alison, tell us a little bit about you and what you do.
I am Alison Decotta, and I set up Mortgage Matters, which is an independent brokerage based here in Fuengirola, about 11 years ago. So basically we have agreements with all of the major banks, and what we're able to do is help non-residents and residents as well to get through the mortgage process, obviously find the best deal with the banks, and help clients all the way through the process.
Yeah, and we definitely need your help, because I noticed lately that a lot more people are buying with a mortgage or want to buy with a mortgage, whether that is because of attractive interest rates or because, they just basically don't want to give all their cash into a property. So it makes sense to buy with a mortgage. And I did a few transactions lately where they have contacted the banks directly. And it's kind of, it gives me headache. And that's why we would like to talk to you, because a lot of people don't even know they are mortgage brokers, which makes everything for me as an agent, for the client, so much more easy, because they can leave everything in your hand.
Yeah, exactly.
So tell us a little bit of how that goes. Like, what is the procedure if you help clients to get a mortgage?
Yeah, well, I think the first thing to say is we don't do anything other than mortgages. So we don't sell properties, we don't do any legal work, it's purely the finance side. So what we can do as far as the clients are concerned, and also which is useful for the estate agents too, is actually qualify the client before they come out to view, so that they fully understand, what the costs are, how much they can borrow, how do the banks evaluate their financial profile, what documentation they need to provide, and a little bit about the whole process, because it's it can be complicated, but
it's time consuming, isn't it?
It's definitely time consuming, but also you're buying a property in a foreign land where in most cases you don't actually speak the language. It's a completely different process to what you're used to at home. So we're here to really just hold the client's hand all the way through the process and get them right to the end, where they get their keys at the notary.
Yeah, because I have the feeling that clients underestimate the procedure of mortgages. They think, let's have a look at properties, and then if I find the right one, then I can sort out the mortgage. But this is not how we like it. We would much prefer to have a client a mortgage pre-approved.
That's it.
Because to get a mortgage pre-approved, I think the fastest you can do it's probably 2 to 3 weeks.
Yeah.
And with a regular bank, if you go directly, it can be anything from 2 weeks to 2 years.
Yeah.
And that's why it's so important to check your paperwork and make sure you actually can afford this type of property, because there's a lot of myth around properties. First of all, how much percent can people actually get? We dive into that a little bit later. But let's start with the actual application process. So what kind of documents people need to provide? How does the first steps work?
Yeah. So first of all, we like to think that we help to take the stress out of the process.
Yeah.
In the sense of, if you've already got your pre-approval in your pocket before you're going out to view, then you're in a much stronger position
100%.
to put down, a deposit, to sign a reservation contract, and to know that you're in a strong position. And it puts you in the same position, if you like, as a cash buyer, because
100%.
you've got your finance sorted out prior. So pre-approval is definitely the way to go.
Because if the market is fast and there's a lot of movement in the market, usually owners don't accept a reservation subject to mortgage.
Yeah.
If you find an owner, fantastic, great, you can relax a little bit more. But ideally, you don't want that, because you want to be able to be in a stronger position with a strong offer.
Yeah, totally. And you definitely don't want to find yourself in a position where you've fallen in love with the property and you need to scramble around to get the mortgage sorted out, and you've only got 10 days or you've only got a couple of weeks. That is very, very stressful.
Yeah.
We can do it.
Yeah.
But it's not the ideal situation, not for the client, nor for yourself as the estate agent. You want to make sure your client is in a strong position to actually put that offer in and believe in the fact that they can get the finance as well.
Yeah.
So, I mean, as far as a pre-approval is concerned, we can do that before the client has even found the property. We can actually submit the application to the banks before the client has even found the property, and get, which is something which is a bit more than a pre-approval, because we can pre-approve at our level, but we can actually get the banks to approve, do the first part of the approval,
Right.
as I say, before they found the property, by providing the documentation. And the documentation required, basically you need to prove what your income is. How do you do that with your tax returns? So they're looking for consistent income over the last couple of years.
Yeah.
They want to know about any existing debt that you've got at home, so in your home country. So for example, a mortgage on the main house where you live, any other mortgages, car loans, personal loans, that kind of thing. Then bank statements, and obviously ID, passport, etc. So as far as the documentation is concerned, what we're showing to the banks is consistent income over the last 2 years and what level of debt you've got at home as well.
Yeah.
So those two aspects are the main points as far which the banks will look at when they're evaluating
Okay.
a mortgage. Okay. How long does it take to get that approval, subject to evaluation? It will usually take them a couple of weeks
Yeah, that's
to
what
come
I thought.
back to me.
Yeah.
So I mean, what you were saying about, you can do it yourself, you can go into the bank, or you can take your own client into the bank, that's fine. It means that you're limited, obviously, to one bank, if that's the bank that you've chosen, whereas we have agreements with all of the major banks. And also, the key to doing this job well, I suppose, is to have the right contacts within the banks, because you've got to have the right person who's keen to do the business and who wants to assist you and who is keen to take you through the process. Rather than, you can find sometimes if you just walk into the bank, you might not get the right contact person.
I guess there are automatic steps which have been developed over the past years with your contacts in the bank, so you know exactly who to contact, because
Exactly.
you walk in a bank and it's like, who do I actually talk to?
Yeah.
And then you kind of need to build a relationship to be able to get things move
Exactly.
on fast. The other big advantage is that they can communicate with you in English, and we know a lot of bank staff actually has very limited English, which doesn't help.
Yeah.
And that is a huge advantage.
Yeah, and I think also 2 or 3 of the larger banks now have specific departments who deal with what they call collaborators or introducers, if you like. And that's all they do. They won't deal with the general public, but they'll deal with our brokers. Yeah,
Okay.
exactly. So that's a big
How many banks
advantage.
average you work with?
At the moment, we deal with around about 7 or 8 banks at the moment. Most of the high street banks,
like the main branches,
the main
Sabadell,
ones.
Santander,
Exactly,
Caixa.
exactly. We will deal with them. So basically, we're taking the headache out of you wandering down the high street and going into every branch, and I mean that would be a bit of a nightmare.
I mean, obviously, people wonder, how do you get paid? Do you get paid by the banks for your service, or by the client who's taken out the mortgage? How does that work?
Some of the banks will pay us a commission, but to be honest with you, we will always charge the client a fee.
Okay.
So we will charge an initial small commitment fee, and then the final part of the fee is due just before completion.
Okay.
So basically, that tells you that we're with the client all the way through the process. So we're not just here to sort out the finance for them. We will also set up the bank account. We'll arrange the valuation, because there needs to be a valuation done on the property once they've found it. We'll obviously help them through all the Spanish documentation, explain to them at each point what's the next step, and get them right the way through to the notary and the keys at completion.
I've been working with you on several cases, and I can say that this fee is not very high. Obviously, I guess every case depends on the value of the property. But if you want to get in touch with Alison and get a quote for your mortgage application, you find her details down in the comment section and get a quote from her. But believe me, it's way less than you think it might be for all the work she does. So talking about the different banks, do you pick for each case, you have your favorite, or you already know, okay, with La Caixa, I think this is better for that sort of client, non-residents, maybe better that bank? So
I mean, it depends on the profile of the client. And so, yes, we will know who is likely to deal better with that client's profile, so we'll approach them. But we do tend to like to offer clients 2 or 3 approvals so that we've got a choice, and then we sit down with them and say, look, the advantage of that is that, what about this, maybe this. It depends on the client and the profile. You know, some clients prefer, you know, well-known bank or a much larger bank. Others will go with, I mean, what you'll find with the mortgages is that a lot of the banks will add on products as part of the mortgage. So you have to be a little bit careful about that.
Yeah, you have to read carefully what's...
I mean, things like life insurance can be very, very expensive in Spain. So we need to take that into account. And then there's things like the arrangement fee. Those vary as well, depending on the banks. And the cancellation fee as well.
Very important,
we look at all of the aspects and try and
find the best,
which is the best one.
Offer for
and we'll sit down with the client and discuss it with them and see what their priorities are and work out the best deal.
I have came across a lot of clients, obviously, who are interested in buying with a mortgage, and they always kind of think, not always, but some seem to think they get 100% finance, which is definitely not the case in Spain.
No.
So let's talk a little bit about numbers and maximum percentages you can ask from the bank to buy your property if you're resident or non-resident.
Right, okay. So as non-residents, first of all, the maximum that you can obtain is 70%. That's the maximum.
If you say maximum, what factors does that depend on? I guess on your income, on your security, and what, like if you have 3 properties paid back in Germany, you have a better chance to get 70% rather than if
I mean, the banks tend to use quite complicated scoring systems. So obviously they'll look at the financials, they'll look at your income, they'll look at your debt, but they'll also look at other things like what age is the client, are they married, are there 2 applicants, how long have they been in their job, have they got their own business, how long have they had that business for. I mean, quite often what you'll find with clients who are self-employed, for example,
more tricky.
Maybe the company is doing really well, but they're not taking a large salary from the company, so that could affect the LTV as well. So it really is very much. It depends on the profile.
Okay.
So I mean, it's a balance, I suppose. That's why it's called risk, if you see what I mean. So it's a balance as to, are they able to get to 70? It really depends. There's so many factors involved.
To it, no?
Yeah.
Okay, but maximum 70%?
Maximum 70, yeah.
And for residents?
For residents, normally it's 80%. We do have 1-2 banks who we might be able to push it to 90.
Right, wow, okay. That, I guess, depends also a lot on the age.
Depends,
okay.
Yeah.
Are there still these, I heard about these offers for people below 35 that they can even get to 100%?
There's been a lot of publicity about that.
Yeah.
So basically how that would work, how that would work would be you'd get your 80% from the bank, and then the government there would be a government-backed loan for the final 20%. But they're very, very strict criteria in order to be able to meet that.
So
and in reality, it's not an easy thing to do.
No, I guess so. So better as a resident, I think, calculate 80% maximum.
For sure.
And then you're
if we can get a little bit more, then fantastic.
I quickly want to talk about numbers because this is so important, and I always like to have a buyer to have it clear how much money they actually need, because a lot of times they forget about the purchase cost. So for a resale property, they're around about 11%, let's say 10% to keep it easier to calculate. So if you want to buy a property of 400,000 euros and you have your mortgage approved with 80%, you still need to have 120,000 euros in cash to be able to buy that property and have the rest financed, which is 20% of the purchase price plus another 10-11% on top.
On top of that. Yeah, it's important that clients are aware of that.
It's super important because it's not, you need to know exactly what is the maximum budget.
Exactly, and it's also important to point out that the banks won't finance those costs.
Yes.
So it needs to come out of the client's savings.
Yeah.
So they need to have their deposit, which would be 20% in the case of a resident, 30% in a non-resident, plus the costs on top of that. So it would be about, let's say, 10%, as you say. So and that needs to come out of savings. So it needs to come out of savings. So what the clients can't do, if it's a non-resident, what they can't do is borrow the deposit in their own country. And then also borrow in Spain.
Interesting.
So that's an important point to make, because quite often you'll find that clients might be making borrowing the deposit, so
Yeah.
the 20%, the
Yeah.
30% down payment plus the costs at home, and then borrowing in Spain, the Spanish banks won't allow you to do that. It needs to come from savings. So in other words, they need to show that they can afford to save that money
Yeah.
in order to
And-
purchase in Spain, because otherwise they'll view it as 100% borrowing.
Yeah,
Borrowing
I
at
see.
home and borrowing it here.
Right.
So that's important to point that out as
Okay.
well.
Okay, interesting. Very important questions I get asked a lot by my clients. What are the interest rates in Spain? So tell us a little bit. What are the different rates?
Okay, well, you've really got, strictly speaking, two products, which would be either a variable rate or a fixed rate. There are some banks that will do what's called a mixed rate, which would be fixed for maybe 5 years, and then you go on to variable after that. But just to simplify it, variable or fixed. Now, the fixed rates are fixed for the full term of the mortgage, which surprises a lot of people because it's not like that where they come from usually. So if we get a 20-year mortgage, your rate will be fixed for 20 years. It won't change.
Yeah.
Rates at the moment, I mean, Euribor is 12-month Euribor, so base rate is around about 2.8 at the moment. It did go up as far as almost 3%.
Yeah. But just came down, no?
It's round about 2.8
Okay.
at the moment.
Yeah.
Yeah, round about 2.8. But we have managed to do, it depends again on the profile. We've been doing a number of fixed rate mortgages at 3%, but for clients
Wow.
with a very good profile,
Yeah.
I mean, I'm actually doing a mortgage at the moment for some clients at 2.4%
Wow.
fixed. So that's really good, and they're
That is
delighted
really
with that.
good.
Yeah, they're delighted with that.
I think the interest rates, I'm talking about Germany because most of my clients are from Germany, is definitely more interesting here, lower interest rates than in other countries.
Yeah.
That's why it's again so attractive to buy
Yeah.
a property with a mortgage here in Spain.
Yeah, I mean, certainly the American clients who come over and are buying here, and you probably found this as well in your business, a lot of North American clients,
Yeah.
and they're really surprised at the rates here. So
Yeah.
they're delighted at what
Yeah,
they
because
can.
everything is expensive
Expensive
in the US,
there.
so
Exactly.
everything is super cheap for them
Yeah,
here. which is
exactly,
good.
exactly. And then on a variable rate, so you'll find that they'll fix it for the first 12 months, round about 2.8, something like that, and then you go on to Euribor plus a margin after that, which changes usually on an annual basis in line with 12-month Euribor, which is the base rate that they use for mortgages here.
What would you recommend?
Well, it's difficult to say. I mean, if we have clients who are thinking that they want to finish the mortgage or cancel it early, maybe in 2 or 3 years' time, because
Yeah.
maybe they're getting a bonus from work or they're getting a lump sum from their pension, they want to cancel it before the end of the term, you might be better on a variable rate. But if you're going to keep the mortgage and you want to know what you're going to be paying for the rest of the lifetime of the mortgage, go with a fixed.
I mean, only think about inflation. When I bought my house, and that is now 6 years ago, and I still pay the same rate than I paid 5 years ago, and I will continue to do that for the next 25 years, every year it feels a lot cheaper because you can never forget about the inflation.
Yeah.
And actually, it feels very cheap now. So if you want to, maybe if it's your primary residence and you want to keep it for the next 20 years, a
If it's your primary residence, yeah.
great.
And
Because you don't need to worry about it.
Exactly,
You know
and
what you gotta
certainly a lot of clients at the moment are looking at fixed rates because of, energy prices. The outlook is that inflation will increase, which obviously has an effect on interest rates.
Yeah.
In turn, they will increase too. So we have a lot of demand for fixed rates at the moment.
Yeah,
But
makes
we
sense.
will sit down with the client and see what's best for them when the time comes.
You just mentioned something I like to have some more information about
Yeah.
because it's also so important.
Yeah.
In average, people hold properties for no longer than 5 years.
Right.
Although when you buy, your plan is different. But that's the reality.
Yeah.
So to pay off a mortgage in full before the end of it, or even make partial payments,
Yeah.
how does that work? Does it
Okay.
cost? Is it
There is a
expensive?
penalty. Some banks will have no penalties, so we do have that option as well. But as a general rule, there's a penalty. Penalties differ according to whether you've got a variable rate or a fixed rate. So a variable rate mortgage, you'll have a penalty of 0.25% of the amount you pay off for the first 3 years only. After that,
It's
zero.
Okay, so only for the first 3 years
On a
there's a
variable rate.
penalty
Yeah.
on a variable rate when you pay
Correct.
off your mortgage in full or partial.
Or partial.
And after 3 years,
Nothing. Yeah.
okay. I think that's also a big difference from one country to another, no?
Yeah. If it's a fixed rate, then they're allowed to charge you up to a maximum of 2% for the first 10 years. And after that, it reduces to 1.5 maximum.
Aha, okay.
Yeah, so it's more expensive, and it makes sense if you think about it, because if you've got a fixed rate that's fixed for 20 years, then the banks have gone out and got you a contract for 20 years. To break that contract is more expensive than to break a variable rate contract.
So for someone who's looking for an investment with the idea of maybe flipping it or renting it and then selling it, a variable rate is definitely the way to go.
Certainly as far as early redemption fees are concerned, yes.
Okay, that is very interesting.
So,
quickly talking about the valuation process, obviously that's something which needs to be done as soon as you reserve a property. It seems like there's a big difference between valuation companies, because lately I've had valuations within 2 days and then valuations which takes weeks because they ask for this and that and this and that.
Right.
How long does it usually take? And how important is the valuation? Let's say you buy a property for 500,000 euros, you agree, and like how much can the valuation vary before it becomes a problem for the mortgage?
Right. Okay. So the Spanish banks are obliged to take an independent valuation. So we will arrange the valuation for the client.
How much does a valuation cost? I guess depends on the property.
Depends on the property.
But let's say 500,000 euro
the purchase price. 500,000, around about 600, 700 euros, approximately.
All right.
Approximately. Again, we have good relations with several valuers, so we're able to get a quote pretty quickly, and they'll keep us updated as to when they're doing the visit and when they can get the report back to us. Usually, they'll be able to do the visit and get the report back to us within a week.
Yeah. Okay.
A week, something like that.
Right.
So the valuation is an important part of the mortgage, because basically the lenders will always need a valuation in order to approve, to issue the binding offer.
Yeah.
Because what they're checking is to make sure that the property is an adequate guarantee for the mortgage.
Yeah.
So they're checking the legalities of the property. They want to make sure all the meters are properly registered, the licenses are in place, there's no issues with the property as far as, the coastal laws and that kind of thing.
One thing I like to throw in, a valuation is kind of half of the due diligence process done. Because when you get a valuation done, you automatically know if your property is within all the laws and regulations of your municipality, which is a great way to find out if all is okay.
Exactly. So normally clients will also have a Spanish lawyer, and that Spanish lawyer will most likely have done their own checks on the property, but the bank also needs to do their own independent checks, and that is done via the valuation. So as you're right in saying that that's the bank's due diligence on the property. So yes, so it should give the client some peace of mind as well that they're buying a property, because if it's adequate for the bank, it's an adequate guarantee, then they should have peace of mind that there should be no issues with the property, because in the bank's vested interest to make sure that there are no issues with the property, because they're using it as a guarantee for the loan.
Exactly. A lot of people are always very nervous about the valuation not matching the sales price, which I guess to a certain percentage up and down is no problem. But when does it start to become problematic, if it is too low or too high?
It can be an issue. I mean, it's not happening these days because the market is on the rise. So the valuations at the moment tend to come in
very realistic
at purchase price or above, because of the way the market is at the moment. But yeah, it can be an issue, especially with things like rustic properties, for example, because they value rustic properties in a different way to urban properties. So basically, if you get your 70% approved, it's 70% of the purchase price or the valuation, the lower of the two. So obviously, if the valuation comes in very low, then you're getting a much lower mortgage amount.
So if you buy 500,000 euros, the valuation only is 450,000 euros, you will still be able to get your mortgage, but it will be based on the price which is in the valuation. Interesting. Okay.
And likewise, I often have clients saying if a valuation comes in above purchase price, can they get 70%? No, they can't. It's always the lower of the two.
All right. When do people usually get rejected?
Oh, there's a number of reasons. Yes, I mean the banks usually look at what's called the debt income ratio of the client. So just to simplify that, they work out from your tax returns what your income, what your net income is. So let's say your net income is, I don't know, just to use an easy number, 10,000 euros per month net. They will allow you to have 40% of that income in debt repayments. So in other words, they would allow you to have 4,000 euros per month paying out in debt. Now that's including any debt you've got at home, plus the new Spanish mortgage. So they don't want you to have any more than 40% of your net income in debt repayments, all debt repayments,
including everything altogether.
Including everything at home and here.
Yeah, because I noticed that buyers come with a little bit of a too optimistic idea of how much they can actually get from the bank. And usually later on, it's about 20-30% less than they actually expect it to be. But that's why it's so good to speak to you before and
for
get
sure.
it approved
And
before.
get an idea. I mean, the banks are cautious, which is a good thing as well, because now with all the new regulations that have come into place, you know, brokers have to be properly qualified. There are EU level laws that have to be followed. Before that came in, I mean, pre-2008, when the crash happened,
everyone got a mortgage.
Yeah, there was a little bit of
110% mortgage.
lack of control. Yeah, exactly. So of course people got into difficulty.
Yeah.
Whereas these days they do the proper checks, they do the proper risk assessment, and so they're not giving out mortgages to people who really can't afford to buy a second home.
I think the banks want to make sure that people are actually able to pay their mortgage rates. And if people ask me, oh, I'm sure there are good deals offered by the bank, like bank repossessed properties, there are no bank repossessed properties on.
Not anymore.
Not anymore.
No.
That time is gone, because usually people are able to pay their mortgages, and unto the event that they actually can't and it goes back to the bank is very rare, because you might find another solution beforehand. So don't ask me.
Just going back to that, I also have a lot of clients saying, yes, but they've got the property as a guarantee, that should be enough. It's not enough. They want to make sure that the affordability is there.
Exactly. How do the banks see the mortgages for investment properties? Like, people want to buy an investment to rent it out, or investment to renovate and flip. I think banks probably don't like to give out mortgages if they know that that person is going to cancel the mortgage in 2 or 3 years. Am I right or wrong? How open are you to the banks about that?
They're not worried about you selling it on or flipping it, as you say. But they don't have a specific product for investors, which clients might be used to at home. For example, in the UK, where I come from, they have what's called buy-to-let mortgages, which are basically investment mortgages, where you can buy a second property or a third property or a fourth property, rent it out, and so it's an investment mortgage as such.
So we don't have that here.
They don't have that here.
Each mortgage application is a new start, basically.
It's a new start. So it's really, they're lending in particular to non-residents for the purposes of buying a second home in Spain.
Okay.
Having said that, they do understand that the majority of clients that I deal with will be using it for family use, but also renting it out when they're not using it. But that's not the specific purpose of the mortgage, if you see what I mean.
Okay, I understand.
So it's not designed for that, but we can do mortgages for clients who are looking to rent out the property or whatever.
If I have a property in Spain which is already paid off and I want to buy another property, does it help to have a paid off property to get a mortgage? Or is it still the income which is the main factor?
No, it's still the income, so we'll still base it on the income. But what we could do, and I have done in the past, is do what's called a double guarantee, which means the bank takes guarantee over both properties, which means you may get a slightly higher LTV. So that is a possibility. We can look at that.
Okay.
But the first property needs to have no mortgage on it at all.
Right. For example, my case, I have 3 properties, 2 on my company, which are investment properties I rent out, and I have 1 house where I live, and it's basically on my name and my husband's name. All these 3 properties have mortgages on. Obviously, I'm in the real estate business, so for me, the best investment ever is to buy more property. So to have that situation and now get a 4th mortgage, does it help my score, so the banks can see, oh, she's been paying her mortgages off for the 5 years. Also rental contracts on other properties which still have a mortgage, actually small percentage mortgages on. Does it also help the score?
Yeah, it will help in the sense that you can show that you've always been a good client, so to speak. You've always kept up to date with your mortgages. But for a fourth property, you'll find that they will severely reduce the LTV if you were to look for a fourth property.
Yeah.
Because as
50% max, I guess, no?
Yeah, exactly.
Okay.
Yeah.
All right. Yeah. But if you have a property which you rent, let's say you have a long-term rental contract, so does it actually, do they see it as an income? So you have...
They will see it as an income.
Yeah.
So they will see it as an income. You mean if it's a property in Spain?
Yeah.
So they would take that into account because it'll be on your tax returns.
Right.
But as I said, they will still decrease the LTV if you're looking for another property after that.
If you have a property here, you have a mortgage on it, let's say 4 or 5 years, and you saved up a little bit, and now you think, now it's time to buy another property as an investment to rent it out. I assume there are good chances, as long as you can prove your income,
that you can
but then you
it.
will maybe not get as much percentage of the sales price as you got for your first property.
That's
correct?
exactly right. That's exactly right. You will find a much lower LTV as it goes on.
Like much lower if we are talking residents. If they got for their first property 80%, for their second...
Probably be looking at 60, 70 for the second one.
Okay.
Yeah.
All right. That's still very good.
Yeah. So how have you been finding the market, Camilla, year to date? Have you seen a change in the market?
It's been interesting this year. Right now, I think I'm at the busiest time as I've ever been. Compared to last year, both years, 2025, 2026, started a little bit slower. Obviously, the weather
we had really bad weather at the beginning of the year,
horrible,
didn't we?
which didn't help. I was still busy, but obviously people don't come out to Spain and intensively looking for properties when it rains. It's a very good time to look at property after big rain because you will definitely see humidity problems. So perfect time to look at properties right now. I have the feeling that a lot of people finding Spain a secure haven. Yeah. Probably now with what's happening around the world, Middle East, Spain becomes even more geographically situated country also where we can kind of feel safe. Our economy is super strong. Spain is doing very well. Obviously I'm German, I'm dealing a lot with the German buyers, but then we also have a lot more American buyers.
I was going to say, have you found a change in the demographic of clients?
100%, definitely. It's still mainly the Eastern Europeans. And now, interesting, obviously what's happening in the Middle East, we have a lot of buyers from all over the world who maybe planned to buy in the Middle East and the UAE. And now
refocusing on Spain. I agree with that.
On other countries. I think not only Spain is benefiting from it, also like other Mediterranean areas. The amount of Dubai number plates we see
Unbelievable.
Here. Oh my God.
I know.
It's a big change. At the moment, I feel it's a very positive feeling. Spain is doing great. Economics are great. And it's kind of a little bit of hype, you know? People were saying, prices went up a lot in the past 2-3 years.
Yeah, and I've been asked about, do you think prices are going to come down? What's your view of that?
No, I don't. You know, a lot of people say, prices maybe go still up, but like slowly. I'm not sure about that because at the moment I feel like people again want to buy at the best prices they can, and automatically that will mean that the prices will go up. So I think it's never too late to buy and get into the property market. You know, people over the years have said, the prices will drop, there will be a crisis. Yeah, maybe.
Really? Well, we've been waiting for a long time.
We've been waiting quite a long time, and I think a lot of people missed good opportunities thinking that the market will crash. We'll continue thinking that. I don't think it's going to happen anytime soon. If it will, then after that, the sun is shining again too. I don't think prices will go down. You will always be able to find a good deal, and in any time of the market you can find good deals and you can negotiate well also. But at the moment there is, I would say, more demand than good properties on the market.
Yeah, for sure. And what about Dutch clients? Have you noticed an upturn in Dutch clients as well?
Yeah, definitely a lot of Dutch clients, Belgians, still probably very strong, the Polish, Eastern European in general.
And Americans, North Americans.
But also a lot of Germans. a lot of Germans are looking to buy at the moment. A lot of people in Germany are not happy with the politics in their country, and a lot of people are able to work remotely. So,
Yes.
you know, I mean, I'm just looking outside, the sun is shining,
Yeah.
it's 25 degrees. I don't know how the weather is in Germany right now,
Yeah.
but I think the weather, the lifestyle, everyone seems to be happy.
Yeah, for sure. That's
definitely
really
affects
what
it.
has changed the most, I think, since COVID times.
Are you busy? How has your year been going?
Yeah, very busy. Like you say, it started off quite slowly, but I think we find quite a lot after Christmas. It takes people a while to get back into gear after Christmas time, and then of course we had the horrendous weather as well. But yeah, no, it's really really busy with. Again, the demographic has changed so much in the last 10 years. I mean, you know, we're getting nationalities. We never had so many Americans before. We never had so many North Americans. No.
But talking about Americans, obviously they are non-residents. Is it more difficult for them to get a mortgage or to get the money from the US into into Spain?
No.
No, it's quite easy.
Not at all. Not at all.
Okay.
And again, what you were saying earlier, a lot of them are coming here to work remotely.
Yeah.
You know?
I mean, the golden visa is not there anymore, and people thought, oh, that's going to affect the market. It didn't at all.
No.
I wish, I think a lot of buyers wish they would have done it in time.
At the time, yeah.
But I even think we have more foreign buyers now than we had with the golden visa. I mean, Spain would be very clever to bring that scheme back on, especially now. That could really boost. But then again, obviously, not all the Spanish people are happy with all the foreigners buying properties here and making the prices to
and pushing the prices up. Yeah.
But what I also noticed over the past year, or maybe 1.5 years, a lot more people buy with mortgages. That has changed a lot. There were times where we had only cash buyers, no mortgages at all, and that has changed a lot. Why do you think a lot more people are buying with mortgage now?
I think obviously there's the clients who need to buy who need a mortgage in order to purchase, and they would rather borrow here than in their home country because the rates are quite often more attractive here. And also it's better to separate, you know, if you've got property at home, you don't really want to put your main property at risk in order to buy property in Spain, so you're better to keep the two separate in my view. But I think there's a lot of business people who would rather borrow and invest their funds in their own businesses or in investments, etc. It makes more sense.
Also, I find that obviously the rents over the past years, the long-term rents have gone up a lot.
Hugely, yeah.
So now we probably get a better deal on a mortgage monthly payment than on rent. And obviously it's being so difficult to find rentals and they are so expensive that a lot more people, also younger people now who live and work here are deciding, let's get a mortgage, let's get that savings together. Obviously, the younger you are, the easier it is to step into that property world and buy your first own property because you have peace of mind, especially with a fixed rate. You know what you're going to pay for the next year. You don't need to move out because your landlord wants to sell. You can actually make changes in the apartment or in the house the way you want it. So, okay, the prices are high and this is what a lot of people are put off by buying a property. But if you see it as a long-term investment over 30 years and you're maybe now 25, 29, 30, 35 and you are able to get the savings together, do it. Because honestly, over the next 30 years, your property value will definitely go up. And once you have a property, believe me, everything is going to get easier.
It's much easier.
And you can build wills.
Once you're on that step.
Yes.
Yeah, for sure.
You also need to think about the future when you are older, when you will not be able to work anymore. If you have a property,
you have an asset,
then is paid off. It's an asset, and honestly, your life is just going to be easier.
The other thing that we're finding is clients buying in sort of more inland. Away from the coast. I think there's a few reasons for that. Obviously, it's a little bit less expensive inland. But also I think people are looking for countryside and nature and that kind of thing. You know, you mentioned earlier about working remotely. What better than to be working in the countryside and working remotely for your company, etc.
And the interest in inland properties has increased a lot.
Hugely.
But it's a little bit more difficult to get a mortgage, right?
It's not necessarily more difficult because, again, it's based on the client's income, but the property itself could be a little bit more complicated because if it's classed as a rustic property, then you might find that the valuation is a little bit more difficult, let's
Okay.
say, because the valuers value rustic properties differently than they would value an urban property.
Can you get a mortgage on a property which doesn't have the LPO or AFO, which is the first occupancy license?
You can do, as long as the property is
Within
30 years old or an older property when LPOs didn't exist.
okay. Okay.
So it is a possibility. Yeah.
Talking about luxury high-end properties, do you often get across clients who apply for mortgages for properties over, let's say, 1, 2, 3, 4 million euros? Or what is your average sales price?
I mean, at the moment, the average sales price has gone up.
Right.
As we said earlier, property purchase prices have increased greatly. Average price at the moment between 500 and a million at the moment.
Oh, is
purchase
it?
price.
Okay.
Yeah, yeah.
All right.
We do get the odd one which
Yeah.
is over a million, but average around about that. Yeah, that's important to point out. They won't consider you to be a resident as far as a mortgage application is concerned until you've done your first Spanish tax return,
So the whole process from
beginning to end.
the first phone call with Alison to sitting at the notary in the best case scenario.
In the best case scenario, I would say 6 to 8 weeks.
Wow,
In the best case scenario,
that is very fast.
yeah.